Hello, everyone. Welcome to Follow the Money, brought to you by Nairametrics. My name is Ugodre, and we do this every Monday on this channel, 8 to 8:30. That is classic 97.3 FM. If you're tuned in on your way to work right now, I hope that it's going to be a great week for you this week. Yeah, so we do this every Monday, 8 to 8:30. Of course, you can catch us on YouTube, our official Nairametrics channel, Nairametrics TV on YouTube. So we're always there. I mean, you can catch this episode or previous episode anytime you like. I mean, like it's online now, so everything is done online, so you can watch at your own pace. But we do know there are a lot of people who love to listen to this program on their way to work on Monday morning. I know about a few last few weeks when I wasn't around, I did get a lot of message from some of you. So we're back. I was back last week, in case you missed last week's episode. And then we're back again this week. Of course, you can catch our other programs on our YouTube channel, Nairametrics TV. Like I said, a new episode of Drinks and Mike just dropped. And of course, new episode of our other programs will also be dropping. Some are already running, by the way. Market Watch is there. Market Watch basically is also on the capital market, stock market, bonds, fixed income, and financial literacy as well. You don't want to miss that in case you're not aware that we have such a program called Market Watch. Got two experts in the studio every week, twice a week actually, breaking down investment ideas and investment opportunities that as we see them every week. So you don't want to miss that as well. It features Mutar and Idika. Yeah, so we do have other ones. What about Money Brief? Have you been checking out my Money Briefs? Money Brief is where I break down, complex things that happen in the economy, try to break it down. There's one on Forex that I did. Is it now going to be strong, continue to be strong to the end of the year? I probably want to check out what I said or what my views are on Money Brief. And we'll have several episodes of Money Briefs as well that you can look at. Now that that's out of the way, we go to today's show. Markets fell again during the week. It was another bloodbath. It appears investors haven't really gotten over this capital gains tax thing. I know the guys behind capital gains tax would say, oh, you're making this too much of capital gains tax, but that's what we're hearing. And the markets are not smiling at all. Yet again, the Nigerian stock market continued its downward trend, and the all-share index fell by 2.3% week, and it closed at 143,790 points. So year to date, stocks, or month to date, I beg your pardon, stocks are down 6.7%. Looks like November is going to end up in a loss, except something else happened. October was up 8%, but November appears to be down 6.7% already. So, market cap shed 2.1 trillion during the week, which means it lost 2.1 trillion naira this week again. So we're now at 92.4 trillion. Now, if we keep losing 2 trillion like we did the week before, then we're likely going to be hitting 90 trillion. So 2.4 trillion last week, 2.1 trillion last week, I beg your pardon. I think over 2 trillion as well, almost 2 trillion the week before. It's looking really bloody. It's a bloodbath out there, man, for stocks. So this month alone, the stock market is down 4.78 trillion naira, wiped out of market capitalization, wiped out of people's gains this week because, of the panic that we are seeing. Some might say it's not panic, but a lot of people are saying, look, if you ask them why they're selling, they tell you, well, we're taking profits off the table. We don't want this capital gains tax to come hit us. And you know what? We're just recycling money into fixed income securities because the yields we're seeing now is probably the last time we're going to see this yield. So these are some of the feedbacks that we're hearing. But bottom line is people are losing money in the stock market right now. So, but it's always an opportunity when you lose money in the stock market. It doesn't mean that you can't basically still invest, right? Yeah, it's opportunity. And we do give out some investment tips, or like recommendations for stocks that we're buying. We share it on our exclusive website, followthemoney.ng, ftm.ng, FTM, which stands for Follow the Money, of course. So ftm.ng. If you want to subscribe and see some of my stock picks or some of my commentary on the market and in general, things that affect the market, we do post there at least twice a week. Like, it's not one of those platforms that you just see news every day, plug in if you're somebody who doesn't want to clutter or just wants, when this thing drops, it drops, then that's for ftm.ng. You want to check it out, exclusive for our subscribers. And so we move on to the other thing that happened as well. As much as stocks were really hitting it wildly during the week, banks also suffered a lot. Banks, of course, those bank stocks tend to do badly when there's a downturn because they are just the sheer volume alone means people can trade them easily. And so whenever there is a downturn, bank stocks tend to do pretty bad. And then whenever there's an upside, bank stocks do well. So that again is an opportunity right there. But what happened to banks? All share index come under serious pressure. And before the weekend ended, bank stocks were down 3.5% for the month. And they're slightly down higher than that by the time the week ended. So, most of the bank stocks, when we hear people talk about to say, explain why bank stocks have dropped, they cite the same thing that we're citing all year round, all week long. Capital gains tax, geopolitical tensions, profit taking, like I mentioned earlier, and some are also pointing to rising regulatory costs because it appears banks seem to be paying a lot of their profits onto regulators, whether it's AMCON for market resolution costs, or whether is more importantly, they complain a lot about CRR, that is the amount of deposit banks have to keep with the central bank. And of course, the central bank is keeping those deposits because that is how it basically controls inflation. It's one of its major monetary policy tools that it uses to control inflation. So that is hitting banks badly at the moment. But that also means there are opportunities for banking stocks. And there's some of them that we recommended on ftm.ng because we think that there are opportunities in there for some of those stocks for investors to basically buy. Because, look at some of those stocks were trading at like 100 plus before. There were some banking stocks, I've tried the names already. They were trading at over 100. These stocks are down right now. So very good entry point. Make no mistakes about it. This is not because of anything fundamental that's going to happen to those companies. Those companies are going to do pretty well, at least next year, as we project. But people are just essentially taking profits off the table, and that is impacting the value of this stock. So if you hold some banking stocks, you're probably right now reeling. Your portfolio is likely tilting towards red. Market stocks are still up year to date. But this month, most of them are probably going to be looking red. I'm sure you want to look at your portfolio now, you'll be saying, oh my God, I don't like what I've saved. But it's just a short term. I think things are going to change. You're going to have confidence in the market. And I believe clearly that things could improve. But for now, it's been red. 4.7 trillion wiped out in November alone because of capital gains tax, as they say. Anyway, so something else happened during the week. Before we go on break, I'm just going to say this. On Friday, something new happened. So we did report on Nairametrics that SEC was going to introduce a new rule for when, investments are settled. So it's basically SEC moving from T+3 to T+2 settlement. So what does that mean? In a nutshell, if you buy shares on Monday, before you have to wait till Thursday before it settles, before you get the money in your account. Of course, you're going to get the alert that you sold, blah, blah, blah. It takes days. So T+3 is today plus 3 days. So on the third day, on the fourth day rather, that's when you kind of get settlement. Now, so SEC has now moved this to T+2, which means if you sell shares on Monday, you get it on Wednesday. If you sell on Wednesday, you get it on Friday. So basically, you can even just buy shares on Monday. You can sell shares on Monday, get money on Wednesday, and then sell on Thursday, or buy another one that same Wednesday and then sell again on Thursday. So I mean, it's a very good idea. It's a very good initiative, I beg your pardon. So it's good for investors, particularly retail investors who really need their cash, like, straight up. And there's other advantages to this. For example, legal cash. Cash comes to you faster than normal. So you don't have to wait so long for your money again. I mean, time is money, you know that, right? So when you sell stocks now, within 2 days, your money comes to you. In some countries, it's probably T+1. If you're wondering why, well, they claim there's a lot of reconciliation issues, blah, blah, but technology solves all these problems, really. So T+2 is what they're saying now for the wider market. Reinvesting then becomes easier for you because now you can, when you get that money, you can really flip it, reinvest it as well. And then there's short-term trading, but traders benefit as well. So for traders who like short-term adrenaline trading, then your money comes in quicker and then you can move it out as well. I mean, I know for the guys in the cryptoverse, this is like, come on, is this what you guys do? Because these guys in the cryptoverse basically get their money almost the same day, if not real time. Even when you sell, the money just settles into your account. So you want to expect that this thing should be a lot faster. But you know what? T+2 is still okay. And it also aligns with global best practices because most countries even have T+1, like I mentioned already. And it's more importantly great for market liquidity because then there's a lot of, once everybody can sell and get their money on time, then they can always flip their money back into the market, cycle it back into the market. And that is fantastic for market liquidity. So market liquidity is good because that enables buying and selling of shares to be faster. And that can often impact prices very well. So it's a good thing because it just makes investing really fun. So that is the news. According to SEC, it has happened already. Started on Friday, November 20th. So you want to check that out with your broker by next week. If you sell your shares, did you really get the value in 2 days? So let us know in the comment section if that is happening to you. All right. And of course, if you're listening in on radio, you can always tweet at me or send us a message. Let us know whether that has been your experience. We're going to take a short break. And when we're back, we're going to be talking about Jumia, IHS, a lot of big deals going on as well, during the week. We're going to talk UACN. They dropped some major insights about their Chi acquisition. Be right back. All right. Welcome to Follow the Money, part 2 of the show. If you're just listening, this is brought to you by Nairametrics. You can catch this episode and previous episode on our YouTube channel, Nairametrics TV. If you're not following, follow Nairametrics TV and hit the notification button so that whenever we have a new show, you cannot miss it. Particularly this one, Follow the Money, because that's what we do here, man. The tribe that basically follows the money. All right. So UACN was in the news a few weeks ago when they announced the acquisition of Chi. Chi is basically used to be Coca-Cola owned company. Coca-Cola itself acquired Chi several years ago, and UACN acquired it. And the major news really is how much UACN paid for Chi. So UACN finally revealed that it paid 182 billion naira to acquire Chi from Coca-Cola. That's some money. That's like $140 million or thereabout, from around $20, I guess, million is what they paid to acquire Chi. The deal was funded via debt, mostly according to UACN, 83% debt, 17% equity, and that's a debt to equity split. So they did take a 151 billion naira in USD denominated loans to help fund that acquisition. And of course, that now forms part of a new SPV that UAC basically put together called UAC Food and Beverage Company Limited. And that's what's going to house this Chi business. So Chi business now belongs to UAC Nigeria. And UAC plans to also refinance that loan because it's a dollar loan. So you got to quickly refinance it, man, because, I mean, you don't know who dollar loans because you don't know what's going to happen. So they want to finance it into a Naira loan at 150, using a 150 billion Naira bond issue. As I suspect that bond issuance is going to be fully, oversubscribed. And so that's a good deal for UACN. That deal basically gives them brands like Chivita, Hollandia, Capri Sun, and all that. So these are all UACN products now. So it appears these guys are building something very impressive with their business. At UACN, these young chaps there are doing amazing stuff. You got to be impressed how far they're doing. Well, I mean, does this really mean business for them with this Chi acquisition? Well, they said that they basically can boost Chi's margin. Margin is currently very slim at 6%. They said they can boost it to 15% and basically unlock 40 to 50 billion, or 45 to 50 billion in profit potential, which they can add to the profit pool of the company. There are risk-related levels. Of course, they did mention that she has high inventory levels, so that can be a challenge for them. But looks like a good deal. I mean, what would the CEO say? CEO says, well, if you don't buy it now, maybe another 4 to 5 years before you see this opportunity again. So they did not want to let this opportunity pass. So they basically bought Chi already. So in terms of UACN, revenue is currently 223 billion, up from 220. Group revenue jumped from 223 billion to 717 billion. EBITDA goes to 67 billion. Share price already up 117% year to date. So it looks like this is a stock that is doing well on the back of some of these acquisitions. Something else happened really because, well, IEI, International Energy Insurance, is one of those insurance companies that you may not really know, but it's been listed on the exchange for a bit. And they said they are targeting 22 billion in recapitalization. I mean, Insurance Act just passed, and so insurance companies are looking to recapitalize. They did also back this plan with an appointment of a new MD, Mr. Olasubosh Sogelola. Yeah, that's the new MD CEO of the company, and he starts effective November 12, 2025. I bet one of his first mandate is to deliver this recapitalization plan that they have. Well, they said that plan is going to help boost solvency, expand its underwriting capacity, and fund strategic growth. I do hope they deploy that money really well. The company is also backed by the Nuremberger Financial Group. That's had a silently growing financial services company that's been making some strategic acquisitions over the last 2 to 3 years. So you want to watch those guys. They're called Nuremberger Financial Group. They're also in pensions. They're now in insurance. They're financial services in general. They're also in asset management. So you want to check them out. And this IEI, by the way, also just recently cleared the loan that they gave to Daewoo, that they collected from Daewoo. So that sort of helped them. And they had some problems with it listed on the exchange for a bit, but looks like things are getting better now that they have some liquidity brought into the business and planned liquidity down the line. All right, so we move on quickly to IHS. So IHS Nigeria contributed about $268 million to the earnings of IHS Group worldwide, right? So IHS Group operates mostly in Nigeria and some African countries, and of course Brazil. So it's a conglomerate, is listed on the New York Stock Exchange, but the Nigerian business delivered a solid performance in the third quarter of the year, generating $268 million in revenue, accounting for more than half, almost 60% of IHS Holdings' total revenue of $485 million. So in case you're wondering, IHS runs most of the towers that you and I use for calls. So the likes of NTN, Airtel, most of these guys rent towers from IHS. That's really their business. And they're one of the largest in this business across Africa, even in the world. And so, but they're not listed on the exchange. They actually used to be listed on the New York Stock Exchange, but they delisted and are now listed on the New York Stock Exchange. And so we looked into those numbers, and the revenue was up 11% year on year, outperforming the group's overall growth of 8.3%. Adjusted EBITDA also hit $170 million, up 7%. Though margins slipped to 63.3% due to energy and admin cost pressures. That is pretty understandable because most of their cell sites run on diesel And we all know what happened to diesel prices over the last couple of years. So that basically has hit them as well. However, revenues have also been grown for same reason, cost reasons, and that's because of the tariff increase that we've seen. And so higher tariffs and lower churns and a stronger Naira also help boost the company's top line revenue. And of course, as much as IHS is not the one charging tariffs, the fact that it's MTN and Airtel charging tariff, that also has a way of passing through to IHS. So the company also said that it did have a churn that hit its revenue by $8 million, but was offset. And that churn was from MTN because MTN, I think, did not, renew some of its leases, but they did get 1,700 plus new lease amendments, 222 plus new locations, and 5%. And that sort of contributed to 5% increase in the company's organic growth. So, IHS solid numbers for them. Interesting to see how this really drives the company's bottom line, because it did face some losses in the past year or so, but looks like it's finding its way out of it. The company said, guess what? Here's what the company CEO said, Sam Darwish. He said, Nigeria is firing on all cylinders, and I guess he's betting on FX and stronger reserves to help improve the company's business. All right, so we go to Jumia. Jumia also released numbers during the week, and Jumia's numbers actually came out a few weeks earlier, but since we're looking at reports of companies. By the way, IHS is an NMX 100 company, in case you're wondering what that is. Nairametrics recently launched NMX 100, which is companies in Nigeria that generate revenue above 100 billion naira. So far, so good. There are like 63 of them, and 62 of them are bigger partners. If you really want to know who these companies are, companies who are on this list, they must have audited financial statements that is available for us to vet. We have to be able to vet them and be sure that they are audited and these companies operate in Nigeria and the revenues are derived in Nigeria. At least most of the revenues are derived in Nigeria. And so IHS belongs to that. Jumia should have belonged to it, but Jumia doesn't disaggregate revenue for Nigeria. So we really don't know how much Jumia Nigeria makes. However, Jumia worldwide, Jumia as a company reported a pre-tax loss of 17.7 billion in the third quarter of 2025. It was slightly better than the same period last year. However, revenue of $45.6 million, which is what it made, missed market expectations, up $50 million, triggering some kind of sell-off of the company's stock. So revenue, like I said, $45.6 million. Even though it missed analyst expectation of $50 million, it was up 25% year on year. So the company is growing. EPS loss, like I mentioned, was 15 cents. In the market expected 13-cent loss, and then operating loss was $17.4 million, much better than the $20.1 million that it did sometime in the previous period. And of course, adjusted EBITDA loss is now $40 million, down $70 million. So in a nutshell, Jumia basically is still a loss-making company. As much as we all know Jumia and we use Jumia app, it's still a loss-making company in general, and it's been like that for years. But they are not necessarily judged by that metric. They are basically judged by other metrics like its revenue, its volumes, of course, its EBITDA, and its ability to somehow generate significant cash, even if it's not making profit. And so those numbers were quite impressive. Orders were up 30% in Nigeria, gross merchandise volume of 43% as well, and strong growth was also seen, guess where? Southwest, Southeast, and Northern Nigeria. In fact, Jumia said they just recently entered the Northern Nigeria market and are expanding rapidly in the Southeast market as well. So Jumia said it aims to break even in 2026, by the end of 2026, and turn a profit in 2027. So as you can see, it's not that easy for everybody who wants to get into e-commerce. E-commerce is not an easy business. It's not a necessarily profit-making business. So the deal here mostly is that you just hope that someone's going to acquire you, or your valuation is going to be so huge that the market will be patient enough to wait and see you. And of course, it also makes sense if you're probably cornering the entire market, or that's your goal basically. But this has been Jumia's story. Jumia's complaint of FX volatility and inflation. What they saying those things are abating now. So Jumia might just be in the money in the next 2 years, like the project. All right, this has been Follow the Money brought to you by Nairametrics. Of course, I hope that you found this episode interesting, and it's going to be a very bumper week. A lot of stuff happening this week. Monetary Policy Committee is meeting this week, and we're going to be seeing whether they're going to cut rates. I do expect them to cut rates by at least 2%. So we'll see if my bet is going to work. All right, until we do this again next week, do have a profitable week ahead. Bye.